What's up, everybody? Lots of stocks were halted earlier in the trading day. Seemed a little weird. We can talk about what happened there and where maybe we've seen something like this before. Amazon has a drug prescription service. And once again, they're trying to get back into the drug game, into the whole medical game, if you will, in every asset of our life. We'll talk about that and a little bit too. And tech stocks are starting to push ARK into one of its better months ever. All that and more. In the meantime, welcome to the most dangerous show on the Tasty Live Network. It's Engineering to Trade. I'm Jamal Chandler on a very, very quiet day. I blame the earnings from last night and this morning. None of them really did anything to move markets. You know what I'm saying? So things have been pretty quiet, and I guess we deserve that. I guess we deserve a couple of quiet days coming up, maybe, particularly one. I mean, we had two really big trading days that were really unexpected in Friday and Monday. And so I guess a little quiet time is in order. Gives you a chance to sort of reevaluate some positions, take a look at some areas where you want to change out. I do wonder if this is the beginning of somewhat of a quiet earnings season. I mean, Netflix has started it off, and I guess the banks too. I mean, they had some moves to the downside, but then they all kind of finished up positive. Morgan Stanley, I think, had a strong move to the upside. But most of them have been kind of quiet, earnings that is, so far. And so I feel like that's causing the market to be quiet. But we'll really get a true test over the next couple of days and the beginning of next week. It just might be somewhat of a quiet before the storm. Let's pull up some slides and let's talk a little bit. I don't give a damn if the market is boring. We're going to make the show interesting, always. You know what I'm saying? So we had around 84 stocks that were halted for volatility on the New York Stock Exchange this morning. Really strange, right around the open. If you saw it, you heard about it. If you didn't, you can just easily take a look at a day chart on a lot of different stocks. When you look at, I think Walmart was one of them, Oxy, the oil name was another, McDonald's. You can see kind of a weird blip on the chart right at the beginning of the day, and it was really kind of weird. And immediately, I had to look up and remind me. You know, when you're like been in a game so long, sometimes you don't remember. Like, this was a weird one-day thing, and it wasn't something that really affected trading, right? That happened today. We saw, you can see the blips on the charts, but nothing really happened. I don't think anybody. It happened so fast, you weren't even able to trade it unless you just happen to have an order sitting out on any one of these names, which is possible. But immediately it lets you know it's a computer thing, right? Like, it's kind of a computer glitch. What it made me think of, and I had to look it up and remind me, something happened in, when was it? I think it was in, I gotta find it. I think it was in like 2012. I don't remember the specific, it was August of 2012. Similar deal, and actually what it correlated with was a trading company. It was a market maker at the time, Knight Trading Company, and it wasn't something that they specifically tried to do. As a matter of fact, it was an accident, and it cost them money. I think about $440 million. It actually caused them to eventually almost basically have to go out of business. They had to get bailed out by a lot of different companies because they were a market maker, and I think they also had a brokerage. They had a clearing firm that was attached to them that also struggled as a result. And so it was not quite too big to fail, but it was big enough that they couldn't let it fail, if that makes any sense. Yeah, so this was kind of weird this morning, and it's reminiscent of that, this issue that happened in August of 2012, and I wonder if we're going to see any impact on any different companies. I'm not necessarily sure, but it's one of those weird things you see in the market every now and again. Again, the market will give you weird things that you see from time to time. The May flash crash of 2010, that was really interesting and strange. We've seen other weird things over time. Again, I don't think this is something that somebody purposely did to try to, spook the market, if you will. It just so happened to happen. But also, I don't think that this is leading to any, lack of trading today. I don't believe, but very, very quiet day. I mean, when you look at the volume on the ES, just over a million, I feel like is somewhat average, just over a million with what we got, like an hour to go. That's fairly quiet. So kind of weird, if you will. Moving on, Amazon. It starts a drug prescription service. Now, if you remember, not long ago, they actually had a service that they were working on with a couple of different companies. They were trying to infiltrate the whole medical market, right? But this one's kind of interesting. I mean, I think it's like a prescription service. Now, of course, it's for Prime members. So you already got to have Prime, which is like, what, $140 a year? And not advertising for Amazon at all. But it's one of those things, once you get on, you hardly get off. You get packages delivered all the time. You can't even begin to stop it. But I think they're doing this prescription service for a lot of easily to get drugs. And look, that whole system is ripe for disruption. It's just a matter of who's going to end up being the person to do it. Amazon's been trying for a while now. Amazon's a well-known disruptor. Obviously, they've had experience disrupting. And so why not head into the space where you can probably... You already have the infrastructure to do a lot of it, right? It's just a matter of catching up with different drug companies, or whether it's prescription or generic or whatever. They have the ability to disrupt. I think eventually you're going to see them continuing to try to get in this field. What does it lead to overall for the stock price? Well, that's the real question here, right? I mean, I think that's meaningful. If you can disrupt that whole space, it can definitely be something that allows them to last a long time. So got to watch this one a little bit closely. And then what we already know was tech stocks are killing it, but ARK is up like 18% this month. I mean, it's no laughing matter, man. We all kind of looked at ARK last year, not so much the stock, right? Obviously the fearless leader and just the unrelenting feeling or the unrelenting thoughts by her to just continue to stay on the path of what they were doing, which is basically scooping up sort of these well, how do I want to say it? Somewhat low profitable tech stocks that they're always looking at the future. It was always kind of their mantra, right, for ARK and those who were running the fund. But it's been on the run recently, and of course they have mostly the tech stocks to thank for that, and Bitcoin stocks. Those have been on the run, which I think they have a decent amount of those in there. So something to keep in mind. You can always remember this is one of those things where you can kind of use this thing to hedge any exposure you have to a lot of tech stocks. Now, the idea of trading against one thing against any other right now is pretty hard because volatility is fairly low, and for those of us who like to sell, it's just not there right now. But something to keep in mind. You know what I'm saying? Anyway, leftovers. I know this is odd, but what do you think about electric toothbrushes? Yes, I said it. Let's move to the next slide. Let's take a look. Got a poll here. By the way, those who are watching the show on the Tasty Live webpage, the Tasty Live app, go over to the Tasty Live YouTube, get in there, type in characters, say what's up to the chat, say what's up to me. And as I'm looking here, we got 50 people, we got 5 likes. Get in there and hit some more likes if you like the content, because then what happens is other things get pushed to you, right? And you could subscribe as well, which then automatically everything that we do on Tasty Live's YouTube page will get pushed to you also. So keep that in mind. Experience with electric toothbrushes. Now, 48% say I've tried them and I like them. 22% say I've tried them but I don't like them. 9% haven't tried them but plan to, and 21% are not interested. Now, I've tried them. I'm just kind of like whatever on them. You know what I mean? Like they say they actually do a better job of brushing, I suppose. I don't know. My wife's a huge electric toothbrush person. She's totally into them. That's her thing. Now, this is not the end of the poll. Let's move to the next slide. Now, keep in mind, those colors coincide exactly with everything we said. Now, we said, I've tried them, I like them. I've tried them, but I don't like them. I haven't tried them, but I plan to. And then there's the I haven't tried them and not interested. So in the purple, I know this is funny. It's broken down by pay, basically. And basically, those who make more are bougie enough to go ahead and have their own electric toothbrushes. So those who make 50K or less, I guess, are in the camp of they're kind of like, I mean, they try them and they like them, but for the most part, they're kind of indifferent. As the income starts to go up, most of them say they tried them and they liked them, as you can see. And I don't know why this really matters. Do you think a price point has something to do with whether you like something or not? I mean, if you like something, you like something, right? Like if you tried and you liked it, it's not saying they have them automatically. It's just saying that they tried them and they liked them. So I I think this is hilarious. I believe, so I know, dude. Somebody says I believe water pick is more useful. I've never used a water pick. I mean, they use them on you at the dentist's office, right? I've never used one. I don't have one at home, but of course you can be like my guy, Grumpy Mike, and take your teeth out at night and soak them, and then you don't have to worry about any of all this electric toothbrush foolishness at all. Let's move ahead to the next slide. That's enough about electric toothbrush. You only get these type of discussions on a day where the SPOOS is only up 4 basis points. That's pretty much it. So one of the things that we've been seeing once again, thank God, is the fact that stocks and bonds are negatively correlated once again. This is a rolling 3-month correlation of the SPOOS, the S&P 500 futures, and 10-year futures. We started to see this correlation again. For most of last year, they moved kind of in the same direction. Now, we don't tend to pay much attention to correlations unless it's 0.5 or negative 0.5, right? And so that's kind of where it was, and that's kind of where it is now. It was 0.5 at the highs of the beginning of last year, as we saw most of the time where markets were going down, that yields were sort of going up throughout the year, right? As we had rate hikes, yields were going higher, markets were just getting completely crushed throughout the year. But we can see something started to change around July, and I think I'd have to look. I don't remember off the top of my head. It's been so long, I'm starting to forget our current rate, how rate hikes have gone more recently. Let me see. We had a 25 basis point March 17th of last year. Okay, yeah, checks out. We had a 50 basis point hike in May. Then we had the 475 basis point hikes, June, July, Sep, and Nov. And it's interesting how, as we had those bigger hikes, the correlation started to decorrelate, for lack of a better word. And so the last hike we had, of course, was December. We had a 50 basis point hike. And so we got this negative correlation again. And I think it's starting to shift, right? We're starting to see this situation where yields are starting to come back down and markets are starting to go back up. And I think that's one of those things that we want. Now, eventually, what we really want to see is that, well, mostly this, I guess. I mean, this is really what we care about. We want to see yields being depressed as markets are starting to go back up. But, you know, we'll see how this ends up really playing out. And you know what? But I shouldn't say that. This is weird. What we really want to see is markets going up, right? And bond futures actually going down, right? So we get that situation where the 60-40 portfolio really works. So it's just really been a weird year when you look at what's been going on with bonds and what's going on with markets. And at some point, this is going to equalize. I just don't know when. Let's move ahead to the next slide. So I wanted to put this up. I wanted to put this up to talk about what's going on with commodities. So there's 2 commodities in particular we're going to talk about, crude and nat gas. So when you're looking at crude futures, right, and this kind of helps to understand why calendar spreads or diagonals might necessarily not be always great trades in names that sort of follow these products. So this stems from somebody that I know who recently traded a diagonal spread in, I think it was UNG, right? UNG obviously follows, if you look at the prospectus on UNG, it kind of gives you an idea of what is actually trading in UNG and how it comes up with the value that it's trading. And of course, it uses UNG's natural gas, which we'll look at in a second. But let me start by explaining crude oil. So this is the crude oil futures, right? Looking at March being the front month, April and May afterwards. Now, those front 3 months are it's considered to be in contango, where the near-term future is trading lower than the next-term future, right? After that, you can see this thing kind of trails off. When oil was going completely crazy last year, and for those who watched the show, you know I put a lot of these forward curves up for futures. When oil was really moving the way it was moving last year, it was really volatile, and usually when a commodity is really volatile, it's in backwardation, meaning not looking like this, meaning all of the futures, like in a backwardation situation, the March future will be trading higher than the April, which will be trading higher than the May, which will be trading higher than the June, and so on and so forth. In this case, we see there's more of a little kind contango in the front, meaning it's a lot calmer than it normally is. And the reason you can see this in the stock price, or I should say in the futures price. When you look at oil right now, it's sitting around 80, 81, 82, 79, like somewhere around there. It's been really quiet, right? For those of you who watched Futures Power Hour, you saw me and Chris Vecchio talk about oil. It's been around the 80 level for quite some time, and it's been fairly quiet. And this futures curve speaks towards that. Let's move to the next slide. Now, this is the natural gas forward curve. Natural gas has just been plummeting through lows for the past month and change now. And oddly enough, you can see the February future is currently poking up a little bit to the upside. This is actually trading above the March future. This is really kind of a funky curve. But those front 2 months are basically trading in backwardation. After that, basically it looks like, I'd say, between March and July is somewhat of a, let's say March and June is somewhat of a flat curve. July to January of next year is basically, I don't know, I guess you could say it's actually flat across the curve from March of this year to October. Let's just say that. And then obviously October through January of next year is basically in contango. So really kind of a weird curve. You got a little bit of backwardation in the front, kind of flat across the curve, little contango in the back of this curve. But my point is looking at February, March, you would not really want to trade a calendar spread in this. Because I should say you not want to be long a calendar spread in this, because that means you're selling the front month and you're buying the next month. But if the front month continues to go higher, you're not going to win on that trade. You know what I mean? Front month has a higher beta to the futures, and so the front month is going to be more bid than the next month. So if you're selling that front month, you're not necessarily going to win on that trade, right? And I believe UNG is a product that sort of replicates this curve. Now you have to look at that, look at the prospectus, and it'll show you which futures is tracking. I don't remember off the top of my head, but you guys can do that on your own, I'm sure, of course. So this is one of those reasons where a lot of times you may be interested in sort of like, say, Microsoft, for example, coming out with earnings tonight, which we're going to look at in a second. Interesting maybe to trade a long calendar spread in that, or where you're selling the front month and buying the next month, because you expect the front month volatility to collapse, right? But in a lot of commodity products, front month is not necessarily going to collapse as hard as you would expect. So just keep that in mind. Let's move ahead to the next slide. Speaking of forward curves, got to put up the SPX forward curve, looking at products and looking at volatility, I should say, and upcoming events over the next couple of weeks. Not a whole lot in the way of events, but obviously everybody's looking towards next week, not only because you got a lot of those mega cap tech names that are about to do earnings, but you also got the FOMC, which we've talked about coming up and finishing on Wednesday, the 1st. Where we're expected basically to do a 25 basis point hike. I don't expect them to say a whole lot, but who knows? The 25 hike, that's basically priced in. It's expected. Then you got the Jan payrolls, which again, we've been keeping an eye on, seeing if there's going to be any change in unemployment. Unemployment rate still at all-time lows, it would seem. And these Jan payrolls haven't been as high as the previous months. The one thing that everybody was talking about from the last one was wage growth. Wage growth calmed down, so maybe at some point the number of people who are employed are going to calm down, because theoretically that's what people expect to happen when you have all these rate hikes. We'll see. Then we got Jan CPI report. Now, the last CPI report was the first real calm one. Maybe they're going to be calmer from here on out, but forward curve is still showing some expected volatility around that time. We'll see what happens. Let's move ahead to the next slide. Earnings coming up. Obviously, we got Microsoft and Boeing. Those are the main two I'm looking at. Then we have FCX. You got Texan. You got another railroad, CNI. I don't think UNP had earnings last night. I don't think a whole lot came out of that. Well, it was down $6 on a $200 stock, but still not a whole lot. Capital One Financial, FFIV, iSurge, which used to be a huge mover on earnings, but iSurge is pretty quiet these days. Then you got Abbott, ADP Processing, which is the one who we look to a lot for ADP. I mean, they have their own jobs metric that they come out with every week right before the big jobs report, right? Then you got another SIMI, ASML, and then you got General Dynamics. If you're looking at General Dynamics, look in the space and see what happened in the other names in the space. And LMT didn't do a whole heck of a lot on earnings today. Something to keep in mind. It had been a big mover, but was fairly quiet today. And what else is there? USB, as far as banks go. Fourth quarter GDP is supposed to be coming up on Thursday, so is new home sales and initial jobless claims. For now. Oh, and one more thing. The number of S&P 500 stocks above the 50-day moving average, only 340, down a little bit from yesterday. Let's go to the platform. Hey, what's up, Brandon? What's going on, man? Grumpy Mike, I saw you earlier, buddy. What's happening? Who else is in the chat? User engagement controversy. Totally don't use. What? Yeah, BA with an IVR of, I know, BA is fairly quiet. Microsoft. So, Microsoft has a, let's go to 242 half. I'm curious, you guys looking at, actually, before we got in the chat a question for everybody. What are we thinking about Microsoft earnings? Bearish, bullish, little movement, or flat? Overall, about 37% of you are bullish. This is really close, though. 37% of bullish, 30% of bearish, 33% little movement to flat. I am, there's what I'm hoping for, and then there's what I think. I think it's going to be quiet. I think a lot of these earnings are about to be inside moves, but who knows? The market is essentially pricing, well, let's see. We'll do the 342 halves. $12 move. Well, it's about 5%. That's about 5%, right? Somewhere around thereabouts. I used to look, it's about basically 5%. I used to look at a lot about, before I became more of a seller of earnings, or I should say a seller of vol, not really earnings. I don't really trade a whole lot of earnings. But I'm almost more interested in trading earnings this time around because I think some of these are going to be inside moves. But at the same time, I don't want to sell a 37 IVR. Really, I don't know. I'm curious. Not on the first one. Like so far, there's been Netflix, right? I had the call calendar. I'm basically doing the same thing for Microsoft here. So we'll see what ends up happening. But 5% move. I'm not sure what any of you are looking at as far as trades. Like I said, I like the idea of doing this kind of call calendar. And it's kind of wide. I mean, obviously the Jan options are kind of pumped up. I'm doing upside. I mean, that's $14 upside, $1. I like the idea of doing that. And I'm long the same strike, but in March. We'll see what ends up happening. The chart is nothing special, right? Like we said, the S&P 500 is, it is above the 50-day moving average, but SPOOS now currently is sitting what? Just above or around the 200-day moving average. We've seen that on a lot of different metrics for SPOOS. Isn't that great how that works out? Even though these things aren't always priced the same, they're all around that same level, right? Microsoft is not really. I don't know. You know what I mean? Like I don't know. What do you have? The Laurent has the 245, 252 half diagonal. Okay. I feel you on that. Which one? You got call, I'm guessing. Different months. All right. 242 half. Wait. You're 245. Oh, you're selling 245. Are you? Oh, you're short these probably, right? And you said diagonal. I'm not sure which months you have, but I dig that. What's that? You have a $7.50 wide diagonal. I dig that. I like it. What else here? We got a Iron Condor. Yeah, I hear you. Microsoft Iron Condor from HB. That's cool. Brandon's long the 217 half call calendar. I hear you. Oh, and BA. Yeah, BA. Another one we can look at. BA has earnings coming up, and of course it had the 210 strike here. 960 that we got that people expected. BA is one that I think a lot of people are looking at. It's somewhat of a comeback story, right? I mean, they've had so many issues over the last couple of years with that, what is it, the 737 MAX, right? I think it is. And it's really kind of just, it's about almost a 5% move here too. It's kind of come back online. I think recently in the fall, things looked really well for them. With regard to a lot of their, they had people come in and analysts come in and everything went really well on that. And the stock has taken off. I mean, since October, we've seen a lot of things take off since October, but BA has definitely benefited from some of the bullishness in the market. And now you got to wonder if it can hold on to some of these gains. Does it go higher to 220? I'd like to see it move higher. Sorry, Evan. I know you wanted to pull back to 180. I'm just sort of a momentum person sometimes when it comes to some of these names. I want to see if it continues to do that. Yeah, Evan, if you got if you're short, right? You've been short for a little bit. I think you've talked about it. If you do, if you are, keep an eye on that position. You might want to, if you're short like a call spread or something. These upside options are fairly, I mean, to be honest with you, they're fairly, in my opinion, they're fairly cheap. Something to keep an eye on, right? Like if you need to hedge yourself, might be a good idea to do it. Other than that, I don't think I'm looking at too many of these earnings, but I'm just hoping for Microsoft to sort of, I would imagine they're going to come out and comment on their newest toy, their newest investment, ChatGPT. We'll see if they say something about that. If they do, again, I decided to go long Microsoft just yesterday via call calendar because I'm short this NVIDIA, and I sort of have this Microsoft NVIDIA pair on right now. Long deltas Microsoft, short deltas in NVIDIA. We'll see how that plays out. So other than that, not a whole lot happened on such a quiet day in the market, and that's all I got for you folks. You know what I'm saying? Be safe out there. Don't necessarily get too caught up in such a quiet day that you feel you need to put things on. Be prudent, as I always say. Thanks for watching the show, and as always, be smart, be safe, trade small, trade often. Peace.